the economic data in terms of the health of the economy, vehicle sales coming in January 35.4% lower year on year, and so on and so on. And you've already pointed to the vehicle industry as a very dire one for South Africa, given the job losses. And where essentially I'm going with this is there's some belief that there is room for aggressive rate cuts at this stage because of the interest rate differential. People are saying that we have fat in the interest rate right now.
I have to be careful about what I say. But I did indicate earlier that I tried to encourage the members of the MPC to go for a 200 basis point reduction in the repo rate. But that idea did not gain any traction. And I've been in committees and meetings for a long time to know that when an idea doesn't gain any traction in a meeting, you forget about it. But the good thing is that the MPC members were determined to have a 100 basis point reduction.
Was that a consensus figure?
Oh yes, it was a consensus figure. Even some of the most difficult MPC members were fully behind that decision. And we agreed that there's going to be data coming out towards the end of February and also mid-April. And if that data indicates that the MPC must meet, we might actually meet before the scheduled scheduled meeting. But if we
You're
decide
alluding
to
then
do that,
to an emergency, possible emergency.
Not emergency, but in between meetings meeting. But if that is indeed the case, we'll obviously have to communicate that to the markets and to the public so people know that meeting. But the problem is that some of the quarterly data was not available to us now. It will, as I say, only available towards end of February, beginning of April. And if that quarterly data indicates a picture different to what we think will be the case, we might need to meet, but we'll indicate to the public on time. But I also wanted to make it clear that the MPC can meet anytime when it feels like meeting, because the world economy and economic developments in general do not wait for a particular date of the MPC. They happen all the time.
If you went into this MPC meeting gunning for 200 basis points and couldn't convince the rest of the meeting,
I won't even suggest it next time. They won't move.
Do you subscribe, though, to the front loading of interest rates in a declining cycle? So it impacts the economy effectively?
Yeah, the key issue is that a central bank must be sensitive to the inflation outlook, but also to growth and employment creation. But in today's world, it's very clear that a central bank must also pay particular attention to financial stability matters. Is this financial instability in the global economy which is causing us a lot of difficulty? So central banks have to pay particular attention as well to financial stability.
It's a very tough balancing act for you, there's no doubt, given the fact that you have to, as you say, stimulate growth and you've got to control inflation at the same time. Where does the rand lie in your decision-making process? The economists out there, there are those of the school of thought who say that interest rate cuts negative for the rand and we can't risk that because of the current account deficit, etc., etc.
The way the MPC operates is that we take the exchange rate as given from the market. We don't have a particular view of the level of the exchange rate. And the interesting thing actually is that the rand exchange rate to the US dollar today is more or less at the same level as at the previous meeting of the MPC. But we never sit around and say we must keep the rand at a particular level. That doesn't cross our minds. We take the exchange rate as given and proceed from there onwards.
I want to come back to interest rates in South Africa. June 2005 or June 2006 to June 2008, the South African Reserve Bank hiked interest rates by 5%. In hindsight, given the reweighting of CPI, did we hike too much?
I'm quite convinced we took the right decisions. And part of the resilience of the South African banking sector might be that set of decisions. And we'll leave it to future historians to judge, but I'm quite convinced we took the correct decisions, and those decisions helped quite a lot. But I don't want myself and yourself to be misunderstood by the viewers, to be suggesting that interest rates have to come down by 500 basis.
Well, that comes to my next point, because
So
the
I
market...
don't want people to misunderstand. There's nothing that's prejudged. Personally, if you ask me, personally, I'm of the view that interest rates in South Africa are very high. That's my personal view. And my frustration is that no sooner have interest rates come down than South Africans go on a reckless spending binge. That worries me. Instead of taking advantage of lower interest rates to remove debt, they just go and increase debt. That worries me, and I think that we need to do something to educate our people. You see, if you look at the current global interest rates, UK less than 3%, Euro area less than 3%, US for all intents and purposes is 0. Okay? You look at South Africa, now we've reduced rates by 100 basis points to 10.5% per annum. So you compare that with the countries I've mentioned, it's still very high. So the differential...
So there's fat in our interest rates?
No, there's no fat. The differential is very high. But that differential is there because of the peculiarities of the South African situation. But I hope psychologically one day, when I'm old and grey and forgotten by everybody and languishing in some way in Limpopo, our people can break out of that psychological barrier, so that when interest rates are down, say, to 5%, people will say, this is my opportunity to remove my debt and to start the saving process, so that when the cycle turns and the interest rates go up, I can benefit from my savings.